You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 31st day of January 2023. Final trading day of the month. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern. Now, that broadcast is reserved for members only and those taking their 1-week free trial. The afternoon broadcast, this one you're listening to right now, is open to the public. It's everybody, everywhere on planet Earth with an internet-connected device. Now, again, the first broadcast is reserved for members only and those taking their 1-week free trial. If you've never taken your 1-week free trial, when Michael comes on in a little bit to do a recap of the live training room, he will show you exactly where you need to go and what you need to click so that you too can take your 1-week free trial. No credit card required. Now, the afternoon broadcast, the one open to the public, this broadcast, there's 2 different ways to join. One's a little better than the other. So let me give you the best way first. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and then every trading day going forward, you'll get an email about an hour before the broadcast starts. And at 12 noon Eastern, all you have to do is click the link in the email. It will automatically log you into our platform. Now, there'll be days when you're out of the office, away from the desktop. If you still want to join the afternoon broadcast live, just take that internet connected device, point the browser to our YouTube channel, youtube.com/CFRN. Pretty easy to remember, youtube.com, you already know that, /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,100 daily live broadcast archived for your educational and viewing pleasure. In fact, it's probably over 2,200 at this point. Now, also, if you log into the platform and at any point during the broadcast, if your audio drops, just simply go to the YouTube channel, youtube.com/CFRN, and pick up right where you left off. With that said, let's get rolling. Now, for the last few days, we've been talking about the top 5 success principles of Job. Our scripture today is Job 31:16 through 20. This is from the Message translation. And this is Job talking to his friends, talking to God. Have I ignored the needs of the poor, turned my back on the indigent, taken care of my own needs and fed my own face while they languished? Wasn't my home always open to them? weren't they always welcome at my table? Have I ever left a poor family shivering in the cold when they had no warm clothes? Didn't the poor bless me when they saw me coming, knowing I'd brought coats from my own closet? See, at this point, Job's still puzzling over what's happened to him and why. Now, the third success principle of Job is about sharing and caring. Job's third top 5 principle, with 7 verses dedicated to it, is that he wants to share and care for others in a way that bucks the trend for wealthy people, both in his day and sadly in ours. Check Job's challenge statements on this. Job 31:15, if I have denied the desires of the poor. Job 31:16, if I have kept my bread to myself. Job 31:19, if I have seen anyone perishing for lack of clothing. Wealthy as he was, Job did not want to hoard his wealth or use it solely for his enjoyment. Rather, he wanted to be sure that he helped others with food, clothing, or whatever was needed. In fact, Job even opened the doors of his own home to strangers. Job 31:32 says, no stranger had to spend the night in the street, for my door was always open to the traveler. Now, the Bible doesn't go into detail about how Job provided for the poor or homeless, and it may well be that he had specific staff in his organization dedicated to meeting those needs. Regardless of how he did it, the point remains. Job includes the principle of sharing and caring as an integral part of his leadership and business management. Remember what Jesus taught about giving a party? It's in Luke 14:13. But when you give a banquet, invite the poor, the crippled, the lame, the blind, and you will be blessed. Although they cannot repay you, you will be repaid at the resurrection of the righteous. And what James said about faith and deeds in James 2:14. What good is it, my brothers and sisters, if someone claims to have faith but has no deeds? Can such faith save them? Suppose a brother or sister is without clothes and daily food. If one of you says to them, go in peace, keep warm and well fed, but does nothing about their physical needs, what good is it? In the same way, faith by itself is not accompanied by action, but is dead. And as you've heard it read from the King James Version, faith without works is dead. Now, don't confuse salvation and works, because salvation is a free gift. But once you are filled with the Holy Spirit, you become God's hands and feet upon this earth. And it should rise up in you a desire to be a blessing to those who need help. Job knew that he was blessed by God. And he also knew that those blessings were not just for him, but for him to also bless others. Sharing and caring, it's a principle that pretty much goes against most of today's success strategies and leadership teachings. It was important for Job, and it's important for us also. Sharing and caring is another way to be set apart as a Christ follower seeking to build his kingdom, especially in your workplace, business, or leadership role. Join me in a word of prayer. Heavenly Father, I'm amazed at the wonderful way that Job refused to deny you. Even when he was beset by the most terrible circumstances any man could have to face. Thank you that you ignore those times when we too have been foolish enough to regret our life or wish it away because we are in the midst of a great difficulty or even depressed by the circumstances of life. Thank you that you know the end from the beginning. And through Job's distress, you brought him to a deeper knowledge and an exquisite understanding of who you really are. Forgive the times that we've said things without thinking. Help us to keep the eyes of our heart on Jesus and keep us trusting you in every eventuality of life, knowing that you are dealing with us and with all your children with eternity in view. Just as you are with your servant Job, thank you for being with us today. It's in Jesus' name we believe and pray. And everybody said amen.
Amen.
Hey, buddy.
Yeah.
Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. The Dow's up 73 points. NASDAQ's up 103, which is almost 1%. S&P 500's up 23. The Russell 2000, our man in the street, up 34 points. That's almost 2%. In the commodity basket, crude oil up 66 cents, trading 78.56 last. That's a gain of almost 1%. Gold up $4.50, trading 19.2740 last. Silver up 3 cents, trading 23.76 last. In the Asian markets at the close, Nikkei down 106. Shanghai down 13. Hang Seng down again today, 227 points, just over 1%. In the European markets at the close, FTSE down 13, the DAX up 2, the CAC basically unchanged on the session. So that gave us a red day in Asia, a mixed day for the UK, and so far, it's a big green Radio Tuesday here in the US of A. So with that, we'll go to Michael, get a recap of everything that happened in the live trading room this morning. Then I'll come back, we'll look at the logic alerts, the concierge trade alerts, and take a big picture look at the markets as we prepare for Fed Day tomorrow. Michael, I can see your screens. Take it away.
Okay. Here we go. Good afternoon, everyone. Today is Tuesday, the 31st day of January, 2023. If you have not taken a free trial with us, go here to mytradingiq.com. Right here is a sign up for your free 5-day training, now 9:30 to 11:30. Click on that. When you take the trial, you should go here and download the trading platform. Okay, it is imperative that you get this trading platform downloaded early on in your trial. All right, you'll be able to look at everything beyond the 2 hours of the room in the morning. That's really what you want to have. You want to have more and more time with it. All right. Excuse me. All right. So, and you should take a look at the trade rules. These are the rules for the trade setups that we do in the morning. Same rules over and over all the time. All right. Watch the videos. These are videos of me actually taking trades in last year, actually. But actually putting the rules and the charts and all the trade setups into work in real time. So watch all this stuff, right? If you're going to take the trial, you should be prepared for the whole trial. All right, so now the spreadsheet. If you are going to look at the spreadsheet, you got to read all the CFTC risk disclosures down to the bottom. Today is the 31st day of January, 2023. Made 29 ticks in crude. We didn't trade gold all morning. It was weird. And we lost 2 ticks on the ES. We hardly had any trades altogether. We only had 6 trades this morning. So it was kind of a weird day anyway, but we're up $265 a contract. At one point, we're up $490 a contract, but we had a couple of stop outs. Today it took 1 minute and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. And let me bring this out so I can see it a little better. There. Okay. If you were to quit trading when you got your goal for the day, we only added 1 minute onto the total from yesterday. So still, you would have only been trading about 6 hours so far this month. And if you quit trading when you got your goal for the day, after those 6 hours, you would be at $2,502.50. Okay, so now the way I want to do this year, since I'm half of the morning session, I'm doing training and half of it I'm trading. So the numbers are going to be lower. But, last year, the way that we did it, I just carried through with 1 contract all year during the training session in the morning. I said, now, if you were to add 1 contract per month, this is what your results would be if you quit trading when you got your goal for the day. This year, I'm thinking I might actually do that. As long as I hit $2,000 per contract per month, then I can add another contract the following month. So that would mean tomorrow. Until I get the goal for the day, I'll trade 2 contracts. That's going to work out okay until we start to get up into multiple contracts. I start getting partial fills and stuff like that. So that's my plan, at least in the beginning, for right now in the year. But $8,332, considering that we trained half the time, we only traded half the time in the month. Those are pretty good numbers. If you compare it to last year, it would be just about the same. 16,000 what we had last year when we traded the whole month. And when we traded the whole 2 hours every day, right? So this year we didn't trade, we traded about half of that every day. And we ended up with half of the amount, so it works out just right. Anyway, all that to say this. Let's just look at gold. Now, we didn't have a single trade set up using the stuff that we have right here. All right, we didn't get any trades that we could take in gold today. Started out in here, and it was having trouble figuring out which direction it was going to go in. And then once it did figure out which direction it was going to go in, it really didn't give us any good trade setups. Looks like there might have been one right here that I missed that would have been a break-even trade for me. I'm sorry. It would have been a break-even trade, and then it turned around and started moving down. And once the context was right, it looks like there might have been one more trend line trade right here. You could pick something up, and then right down here, it looks like there was one you could have taken, but would have stopped you out. Had to change the context back to bullish. Right here, there was a trade. And then it just got really choppy after that. Total chop right there. We didn't place a single trade this morning in gold. The crude oil, we started out, right here was our first trade in crude. This wasn't actually our first trade, but it was the first trade that I counted. We picked up 24 ticks on that trade. Then we picked up 10 ticks on the next trade to get us to 34. And there was another trade that was 5 ticks that got us to 39. And then we stopped out, and that got us down to 29. So somewhere in here, there was another trade that got us to 39. I don't know where it was. That might have been the one that got us to 39. There might have been, I think there was a 10 tick trade right in here that I missed. I think that was the one that got us to 39. And there was another one right here that we took that got us the plus 10. And then we got a little bit more to get us to 39. So we got 24, then 34, then 39, and then we stopped out. So we're back down to 29. All this happened right at the end of the session. Now, the context was still bearish right here. It had to get up above this level to get any long trades. So the context was still bearish, but I didn't take any of these in here because I thought it was still a little bit choppy. if I would have taken them. There were like 1, 2, 3, 4, 5 red offer reds right here, right in a row. And I'm going to do it. And so I didn't take any of those, but that was the end of the session right there for us. We didn't take any more trades with that. Now I want to show you guys with the trading view stuff. Where with the trading view, it's written to figure out the context for you, so you don't have to think all that much about it. On gold, we didn't have any trade setups, and you see how the long-term trend, which is the black outline right here, is just flat. You just don't want to trade when it's flat. You want to wait until your long-term trend has a trend, and then start taking trades with the short-term trend within it. But if we go back here to the beginning, this is the trading view stuff. Now with the trading view stuff, you just want to have this black line be in the right color, and then you can take the bounces off the BBC ribbon, any part of the ribbon. Okay, as long as the black line is in the right color, you can take those bounces. So right here, the first few minutes on gold, we really didn't have anything, but right here, the black line was in the green. We had a bounce right there you could have taken. Again, the black line's in the green, you had a bounce right there you could have taken. Again, right there, black line's in the green, you had a bounce right there you could have taken. Again, right here, the black line's in the green, you had a bounce right there you could have taken. Black line was in the red all through here. You really didn't have anything you could take, except for this one right here. You could have taken that, and that looks like it would have stopped you out, I think, right? 38.1 down to 38.7. It went 4 ticks into profit. If you would have gotten a great fill on it, it went 4 ticks into profit, but I think it would have stopped you out. Then it got sideways in here and it started to change direction. Okay, you see when the long term is like this, well, it depends, Rick. When you start getting up to multiple contracts, you can still get partial fills and stuff like that. When you start getting up to 15 or 20 contracts. The question was, you won't have to worry so much about partial fills on the ES, and you can still get partial fills anytime. All right, now you can set it so that it's got to fill the whole block or none, but that adds extra risk. Okay, I don't really want to get into explaining that right now, but as I was going through this, the green line, the black line is in the green right here, so any bounce off the green would be okay to take. Again, right in here, see right here, the long-term trend is up, so you don't even consider anything on the short side. Over here, it bounces off the green, off the BBC ribbon again. The black is in the green. Here it got all flat. This is kind of where we ended up going, right? It got all flat in here, so you don't want to take anything in here when it's all flat and messy like this. Just leave it alone, and that was gold. So just see how many trade opportunities was that? 1, 2, 3, 4, 5, 6. 7, 8. Oh, I'm sorry, 6. 6 with 1 stop out. And that's what we had available in gold using the trading view stuff. And compared to none, doing the things we normally do. There's a lot of opportunity. This just simplifies the whole process for you. If we go through this on crude oil today, there's going to be even a lot more. On crude today, that's what we traded the most, and we had 4 trades that we took on crude. And look at this right here. Let's just start here at 9:30. Right, the black line is in the green. Long trade, long trade, long trade, long trade. All those are valid trades. All the way up to here. This would have been a long trade. That would have stopped. No, actually, the black line was not in the green on that one, so that's not a long trade. So right here on this whole run up to 10 o'clock, you had almost as many trades as I took. Right in here, you had another one there, not one there. So that's 6. Now when it's in the red, 1 there, 7. The long-term trend is flat. So even though it's in the green right here, and you could have taken that, would have been a break-even trade or maybe a little profit, but not really good. Started trending down a little bit in here, so we'll just skip all these and go right to this. I know those would have worked out too, but we'll just go right to this. 1 there and 1 there. With the trend, the long-term trend was actually going down. We'll skip this, even though it would have worked. So you're up to about 8 or 10 right there. Another one right here where the long-term trend is down. Got the short right there, and now it's all flat again. So that was crude oil. So that was about 10 successful trades there on crude. Now we'll look at the ES. Okay, on the ES, we'll start all the way back here at the beginning of the session. Just want to point this out. And I try to do this in the morning when, when I see a trade setting up that like something like, well, like this right here. That is actually a trade here because the black is in the red right there, and you can take that down close at 9:40 on the ES. Let's just go look at what that looks like here. It was inside all this mess in here. I didn't want to trade anything at that point. But 9:40, it was right in here. 9:37, 9:40, something like that, right here. Yeah, 9:37. It was right in here. So you couldn't have taken that trade from these charts, but you could have taken it over here. There's a lot of cases like that. But if we go forward where the black line is clearly in the green like that, and taking the bounces off the ribbon there and there, those have been right in here, where I didn't want to trade in here because the context was kind of messed up. In here, it's clearly in the green. The context is clearly showing up. The long-term trend is showing up. Keep going and see it all flattened out here. It all flattened out here. Started to go down. You had actually none of those actually touched the ribbon right there. So it was really close. This is the only one that actually touched the ribbon. Excuse me. That was the only one that actually touched the ribbon. And that went enough to get you stopped to break even. Turn back up. Didn't give any trades. Turn back down. Gave one trade right here. That would have been, I don't know how many ticks. 38 down to 36. So 2 points. Clearly in the green. Long trade. Long trade. Long trade. Long trade. Long trade. Long trade. Everything was going up here. This would have been a long trade. This one would have stopped you out. Okay, then it got all flat. Nothing. Back to up. Long trade. Long trade. Those would have been combined. One long trade here. One long trade and all of that. You see, when it's in the red, it's still giving these short trades in here. If the long-term trend is changing, just as it's changing there, it's not really a great time to trade. This has got a pretty good slope on it. So this one right here would have been okay to take. Then it changed back to up. So you had this one right here that was okay to take. That's and that's how it looked on TradingView today. Okay, all the same things, just a lot easier to do. You're using the same ribbon, you're using basically the same things. You don't have to use the slingshot for the trade setups, but you can use the slingshot, one, to give yourself a little confidence when you get into a trade setup, and two, to manage a trade. Because here with DT Pro, when we're getting into a trade, we're always anticipating. Hang on. Okay, we're always anticipating that the green line is going to get into the cycle. All right, and then when the green line gets into the cycle, you want to trail your stop really close because it's time for it to pull back. Here, this is almost the same green line. It's not exactly the same, but it's almost the same. We're anticipating the same thing. It's going to go from the overbought to the oversold, from the oversold to the overbought. So you can use that to manage your trade. Also, when you get into a trade that's bouncing off the ribbon and you have the white line crossing through the green line and the overbought or oversold area, depending what direction you're going in, that is also a good thing to have all at once. Okay. All right. There's going to be, as we move forward with all this stuff, there's going to be a ton of new things that I'm going to be able to show you guys, but good, kind of not too much information all at once. All right. So that is that stuff. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 31st day of January, 2023. We made 29 ticks in crude, 0 ticks in gold, and -2 ticks on the ES. That put us at 265 in the morning session. Today took 1 minute and one trade to get to $100 a contract, and we took a total of 6 trades. So on the month now at $8,332 a contract. That is over 20 trading days, averaging $416 per contract per 2-hour trading day. We've now gotten our goal 19 out of 20 days so far this year. And this is how we're going to end the month of January. So far in the year and on the month, that's how we are. If you were to quit trading when you got your goal for the day and you were to, had one contract a month, you still be on one contract. But if you were to quit trading when you got your goal for the day, so far we traded about 6 hours this month getting our goal, just under 6 hours, and we'd be at $2,502 with one contract. So averaging about $400 per hour for the time trading. Okay. Now, if you've not taken a free trial with us and you want to, go ahead to mytradingiq.com. Click on this right here. All right, and that is going to bring you to, I think, this page. No, not that page. It's going to bring you to. It's going to bring you to this page. Just fill out this form. And then we get this form open. That form. Just fill out that form, and you'll be sent all the information you need to get into the room in the morning. You should definitely download the trading platform. Okay, if you're going to take the trial, go get trading platforms and download the trading platform. If you're using TradingView, I have layouts preset for each level of TradingView that you're using. Okay, if you get one chart, two charts, or multiple charts, I have layouts preset for that. So just get in touch with us and let me know. Send an email to support@mytradingiq.com or support@cfrn.net. Okay, either one will get to me. All right, that is it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. Okay, recap of the recap.
Today, 1 minute and one trade, $100 a contract.
Good job.
Thank you.
Take care of yourself, brother. Get some rest.
I'm trying. I'm just hoping Jada doesn't get it too bad. But, all right.
All right.
I'll see you all later.
All right, I'll talk to you later.
All right. Thanks.
Okay, guys, everything you just saw that Michael went through, that's what happened in the live training room this morning. That's the broadcast that is reserved for members only and those taking their 1 week free trial. We're not the woulda, coulda, shoulda guys that you find all over the internet. Everything that we do is live in real time. From the trades that we put on in the live training room in the morning, not only is Michael or Valerie putting on, taking off trades live in real time, but they're explaining every move they make, every trade they take, and the rule behind it while you ask questions. That's how you learn the methodology and the strategy. Now, along with the live training room, which is 2 hours every day, because we focus on futures trade around the clock. Today's the Tuesday session up until 5 p.m. Eastern. And then the markets will go quiet for an hour. At 6 p.m. Eastern, the Globex markets will open. And that is the beginning of the Wednesday session, even though it's still Tuesday night here in the U.S. Logic 247 is our around-the-clock, 24/7 Emini alert service. But it's not just the E-minis. It's also crude, gold, silver, the euro, bonds. We're in week 235 of Logic 247. Over those 235 weeks, we've issued over 13,400 individual handcrafted alerts. The alerts are designed not so you can just trade the alerts without having to learn how to trade. I know some people make that mistake. Don't do it. You have an opportunity to learn how to trade. That's a life skill. Once you learn it, nobody can ever take it away from you. And we're not teaching you how to trade a specific market. We're teaching you how to trade. Once you understand the methodology, the strategy, and how to read the indicators, you can trade any market. You can trade the S&P E-mini, you can trade Google or Alphabet or Walmart, you can trade Bitcoin or Ethereum, you can trade the British pound. Price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Now the alerts, both the logic alerts and the concierge trade alerts, are based on the 30-minute chart. When we go to the charts in a few minutes, I'll show you exactly how you handle those CTA numbers, and the logic alerts are basically self-explanatory. Since the markets opened Sunday night at 6 p.m. Eastern through 6:45 a.m. this morning, we'll get an additional recap this afternoon and then one late tonight. 21 alerts issued, 3 never triggered, still waiting on 1. That was at 6:45 a.m. when Valerie posted the recap. So out of the 21 total alerts issued, we had 17 actionable alerts, of which 2 or 12% would have been stopped out based on not risking more than $300 per contract per trade, less when possible based on market structure, and a simple 3-step process that we teach all of our members in their unlimited one-on-one mentoring sessions. Over the last 235 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile I just explained. Now, the logic alerts are based on current price action. However, there's plenty of time built into each alert for you to study the alert, study your 30-minute chart, see the window of opportunity, and be prepared when price reaches the window of opportunity to execute your trade just like Michael and Valerie teach you every morning in the live training room. Okay? This way, if you will repeat this process enough times, you'll get to the point where you don't need anybody to tell you when to get in or when to get out, because the chart will tell you. Now, we're in the process of setting up a live training room for those specifically using the TradingView platform. I made a post in the Telegram discussion group over the weekend. If you want to be a part of that beta test live training room for TradingView users only, make sure you let us know so that when we roll it out, you'll be included. You'll know what time, where to be, and what you need to do. Okay? All right. So here's where we stand for the week as of this morning. By the time Valerie posts the updated recap, again, the alerts go out well ahead of them triggering, because the purpose is for you to be able to study the chart and understand why the entry's where it's at, why the initial target's where it's at, the second, the third, the fourth target, whatever the case may be, and then the final trade to target. On a long alert, the final trade to target will always be the weekly zone above. On a short, the final trade to target will always be the weekly zone below. Now, some of you may be new and you may not know what the alerts actually look like. So let me just show you a couple. We're in week 235. Sunday night Globex open. It says 4:01 here because I'm on Mountain Standard Time. That's how Telegram works. It reads the clock on your computer. So if you're on the East Coast, yours is going to say 6:01. If you're on the West Coast, it's going to say 3:01. So the first alert that came out was to be short the S&P. That was alert number 13,425. Now from 4072 to the initial target at 4070, that gives you your goal for the day, 2 points. If you want to trade for more, then you've got a second target. It's where the market will most likely find potential support, perhaps catch a bounce. So you got 1, 2, 3, and then the final trade to target at 4038/4039. Up here, we can see when Valerie did the recap, price had dropped. The first time she passed through, we had dropped to 4067 1/4. And the second time she passed through, we had dropped to 40.40. And the weekly zone was 40.38/39. Now this alert was issued Sunday night, so we were using last week's weekly trading zones. The new zones are issued to our members and those taking the trial Monday morning at 6:15 a.m. Eastern. Once the zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. So from 72 to 40.40, that's a 72-point move. Again, if you go and look at your chart, you'll see that there was plenty of time, hours, to get ready for this trade before it actually triggered. We're as transparent as possible. All alerts come out before they trigger, and everything you see in the live training room, it's live in real time in live markets. We had short on the Dow, short on the Russell, short on the NQ, short on crude, short on gold. This got duplicated here. The Z's means no trigger. The reason here is because it was duplicated below. We had a short on the euro. We had a stop out. That's the red X on the bonds. Then we had a duplication here of the Russell. And then we had a long on the euro. We had a short and we had a long. And this silver trade never triggered. Now that all happened Sunday night. Most traders are waiting for Monday morning, 9:30 a.m. Eastern, for Wall Street to open. But we did all of this Sunday night. Now, this is where we began yesterday. We had a short on the NQ, short on the ES. And as you can see, price went from 40.43 to the target, 40.29.5. The zone was 28.29. Now on Monday, we're using the new weekly zones because these were posted after 6:15 a.m. Eastern. There's a short on crude, short on silver, short on gold, short on the Russell, stop out on the Dow, short on the NQ, and a stop out on bonds. Okay? And because of market structure, I have not put anything out yet today, but I will as the day progresses and as market structure provides windows of opportunity. Now, along with the Logic 247 alerts, which come out around the clock, we still have our original alert service, the concierge trade alerts. And they're different in a couple different ways. Number one, they don't come out around the clock. They come out as a static report shortly after the Globex open. Globex opened last night at 6 p.m. as it does every night, Sunday through Thursday. So at 6:55 p.m. Eastern, all of our members and everyone on the trial had these numbers. Logic 247 and the CTAs cover the same markets: S&P, Dow, Russell, crude, NQ, gold, silver, euro, and bonds. Chances are you don't trade all these markets, and if you're new to trading, you shouldn't try to trade all these markets. Okay? Focus in on one or two markets until you learn the strategy, learn how to read the indicators, and learn how to read the chart. Because the chart will give you the purest form of information that you can find. We'll focus on the ES here just so you know what you're supposed to do with these numbers. The first thing you want to do, the second this thing gets posted, is you want to look at where price is at this time. It's always going to be between these two numbers. You should then draw a line in the sand at 40.71 and a line in the sand at 40.21. From where price is at this time, if price gets above the 30-minute BBC and starts trending higher, then our strategy is going to look for opportunities to be long the market, because that's bullish. On the other hand, if price gets below the 30-minute BBC and starts trending down, that's bearish, and so our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247, where we've already shown you where the opportunity is long before it triggers. And everything you learn in the live training room every trading day, to yourself find opportunities to be long or short the market. Remember, our goal is to help you become self-sufficient so that you never need anyone to tell you when to get in, when to get out, because you're able to look at the chart and see the windows of opportunity yourself. So, because this broadcast is open to the public, some of you might not have these numbers. Now, every member and every trial member had the numbers last night at 6:55. But if you're not a member and not on a trial, if you want to grab a screenshot of the numbers that we provided to our members last night, do that now before we go to the charts. Okay? All right. Let us start where we always do, with the daily chart. Now, on yesterday's broadcast, we drew in this little window of opportunity here. Now, this is on a daily chart. We said on the broadcast yesterday that what will most likely happen is price will pass halfway through the window and then retrace. And that's exactly what it's done. Overhead, we have resistance at the 50% reverse fib. We've been in a downtrend since March 29th of last year. The low of the downtrend was put in here on October 13th. We've made numerous attempts to break out of the downtrend, and each one has failed in a spectacular fashion. So we know where resistance is, and we know where support is. The low of the day. Below the low of the day is the 24% fib extension and the daily BBC. If price overcomes the 50% reverse fib, then we have to look to yesterday's high as potential resistance, and then January 27th high. This is the Tuesday candle, the Monday candle, the Friday candle. So, resistance at the 50% reverse fib, potential resistance at Monday's high, then Friday's high, and then the high put in back on December 13th. We've gotten stopped at the 50% reverse fib every time we've approached it. We've yet to touch the 62% reverse fib. Now, why do we look at a daily chart if we're trading 30-minute charts and 7-tick range charts or 5-minute charts? Because institutions look at daily, weekly, and monthly charts the way you and I look at 30-minute charts and 5-minute charts and tick charts and range charts. Size matters. I know you've heard it doesn't, but in some cases it actually does. You see, the institutions have accounts denominated in hundreds of millions and billions of dollars, whereas the typical retail trader has accounts denominated in thousands and tens of thousands of dollars. It is the institutional buying and selling that actually moves price. And so, whatever market you trade, it may not be the S&P 500 E-mini, the bellwether. Okay? Maybe you trade Amazon or Walmart or Alphabet or Bitcoin or the British pound. Spend 2 minutes before you start trading looking at the daily chart of the market you're about to trade. It will provide you with very valuable information. Number one, you can see which way the institutional wind is blowing, and you can clearly see where the obstacles lie, whether the market's moving higher or lower. If price were to collapse here and head down, support would be at the low of the day. Then the daily BBC, that's the green line, and the 24% fib extension. Jot those numbers down on a notepad and go to your 30-minute chart, which is your roadmap, where you'll see the windows of opportunity. And then, of course, on your other screen, utilize your 7-tick range chart or your 5-minute chart, whatever chart you've chosen to actually execute your trades on. Okay, some people use a 1-minute chart. They like that better than the 7-tick range. It's a matter of preference. No matter what market you're trading, no matter what time frame you're using, the clock on the wall is always price. So whether you're on the TradingView platform, or the DT Pro platform, or the Ninja platform, or any of a number of platforms that are available, TradingView is rapidly becoming the most popular, and that's why we're excited about opening a live training room specifically for those who are using the TradingView platform. No matter what platform you're on, price is the same. Okay? All right. Now the green line is called the BBC. It simply stands for bull bear cross. When price crosses below that green line, we're bearish. We anticipate lower prices. Price always reverts to the mean. And when price pulls back to the BBC, it holds more often than it doesn't. Once price gets back above the BBC and the CFMA1, which I refer to as red and falling and blue and climbing, which I hope are obvious reasons. One's bullish, the other bearish. Okay, price is above the BBC and you got blue and climbing, and you're looking for longs until price begins that pullback to the BBC, and again the pullback holds more often than not. Held here, held here, held here, held here. Eventually it won't hold, because that's what keeps markets fluid and tradable. Of course, we get into more detail with that in the live training room and also in your unlimited one-on-one mentoring sessions when you become a lifetime member. Price could stay in this area up until the Fed announcement tomorrow. Word on the street is this time we only see a 1/4 point hike. But no one knows until it's actually announced tomorrow at 2 p.m. Eastern. Well, I take that back. There are people who know, like the people who are making the decision. Okay, so just spending 2 minutes with the daily chart of whatever market you trade will let you know where important inflection points are. Okay, this pull back to the BBC held, and it held, and when it pulls back again, we expect it to hold until proven otherwise. Okay, remember, institutions are watching daily, weekly, and monthly charts the way we watch smaller time frames. Let's go to the 30-minute chart of the ES. Now, when I showed you these before, I said draw a line in the sand here, a line in the sand here. These are what my lines in the sand look like. They provide great visual cues so that you understand where price is trying to go. Important prices, important areas are almost always tested. The vertical line separates today, Tuesday, from yesterday, Monday. But remember, today's session, the Tuesday session, started last night, Monday night, at 6 p.m. Eastern, 1800 hours. Where did we open? Below the BBC. Once price got below blue and climbing turned to red and falling. And where did price go? Right to the weekly trading zone. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance. We dropped last night, so there was plenty of opportunity to get your goal for the day here. Price consolidated at the weekly trading zone for a number of hours. Remember, these are 30-minute candles. We published the zones for our members since December 14th of 2009. So we have over 13 years of data that tells us how price behaves around the weekly zones. Only 3 things happen at a zone. The most common, 70% of the time, is consolidation. The second most common thing is rejection. The third and least likely, 10% of the time, is the slice. Okay? Rejection is when price, now this zone is 40.28/29. Price came down and touched the zone, but when the 30-minute candle closed, the only thing left touching the zone was the wick. See, the zone again is 40.28/40.29. And the low of this candle was 40.29.5. So it came within 2 ticks of actually touching the zone. So price bounces, comes down to the zone, consolidates for hours, pulls back to the BBC. Again, the pullback holds more often than not. This time we get below the weekly zone. After all this consolidation, we get below the zone, and then we hit the short target, 40.21. So you had all this area here to use your whatever time frame you execute on to get your goal for the day. Now, once price got above the BBC and held the pullback, and price started to move higher, then obviously you had an opportunity from 40.50 up to 40.60, which is where you would expect resistance. And that's what we got. That's a 10-point move from 40.50 to 40.60. 10 points at $50 a point, $500 per contract traded. Now, what's price trying to do? It's trying to make it to the long target as well. Many days we will see two-sided action. However, I want you to notice that the step line has crossed over blue and climbing. When that happens, it's a very good indication that price is going to attempt to pull back to the BBC. Again, we expect the pullback to hold until proven otherwise, and that would give us another leg up to the zone at 40.60. Also, by looking left, you can see that this high lines up with this high. Okay? Now, people will tell you, oh man, you can't trade support and resistance these days. That's horse and buggy stuff. There's algorithms and indicators and oscillators and a lot of noise, right? How much time and how much treasure have you been chasing that holy grail that not only doesn't exist, but it can't exist because it would defy the laws of physics and science and even God? Okay? Learn to read the chart. Learn to read the indicators. As a lifetime member, you have lifetime access to the weekly trading zones. Once you understand how to incorporate them into your trading, they're going to become one of the most important tools in your trading toolbox. When price trades through a CTA target, it will most often trigger again. So we came down to the target, caught a bounce, came down through the target from 40.21 to 40.25. And then we got back above, and this time we dropped to 4,007, 50 bucks a point, 14 points, $50 a point. Then price gets above the BBC, get a leg, get a retracement, get a leg, consolidation, just like we had consolidation at the zone here, consolidation here, rejection, rejection, rejection. We finally traded through it. The buyers seem pretty committed today. If they can take out this high put in yesterday, okay, now that's not the high of the session, but if price can overcome this swing high, then we would expect it to take us to this swing high. And so 40.67 up to 40.71, that would be 4 points, $50 a point, $200 per contract traded. Now, the 2420 blueprint is going to start you out in sim. You need to put together 10 consecutive days in a row in your demo account before you even think about trading real money. Otherwise, you're just going to blow up another account. And the whole reason you're here is so that you won't blow up another account, but you'll actually learn how to trade. If you don't have the patience and self-discipline to put together 10 consecutive days in a row in sim before you go live, you probably don't have the patience and self-discipline to become a trader. And that's just the truth. Trying to save you time and treasure. Okay? Now, money's a renewable resource, but time's not. Once you learn how to trade, that's a very valuable life skill. You can trade from anywhere on planet Earth as long as you have a strong, reliable internet connection. So that creates freedom. If your goal is a couple points a day, that's $100 per contract. The blueprint, once you go live and increase your account balance by $2,000, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is your first contract is funded with your startup capital. The second contract is funded with profit you earned in the market. That's a big deal. The blueprint will notify you when it's time to add number 3, number 4, number 5, number 10, goes all the way up to number 20. So if you take 2 points out of the S&P, that's $100 with one contract. But by the time you earn the right to trade 5 contracts based on the blueprint, those same 2 points become 500 a day. And again, you only add one at a time, and you only add with profit you earned in the market. Once you go live, if you ever experience 2 consecutive days in a row where you don't reach your goal in 10 trades or less, you need to come out of the live account, back into the sim, and book a private one-on-one mentoring session. That is not a walk of shame. It's the opposite. It's a smart business decision. Because if you have 2 days back to back where you don't reach your goal, there's something about the strategy, something about how you're executing your trade that you just need some help on. Okay? Don't be embarrassed or ashamed to ask for help. That's why we're here. To help you not learn some parlor trick or some magic act, but to learn how to trade. By the time you hit 10 contracts, 2 points in the S&P puts you in the top 3% of wage earners worldwide. But there's no get rich quick here. To go from 1 to 10 contracts, it's going to probably take you about a year if you follow the blueprint. It's It's called the 24/20 blueprint because it's designed to help you go from 1 to 20 contracts over a period of 24 months. Now, I know that sounds like an eternity to a day trader, but where were you 2 years ago? Were you struggling then? Trying out some new shiny object? Came with an email and lots of clever ad copy? When you become a lifetime member with us, we don't have any upsells. We have no new shiny objects for you to buy. And there are no recurring fees. When we rolled out our indicators and strategy on TradingView, our passport holders gained access to every stock in the stock universe, over 8,000. Every crypto, every Forex pair. How much additional did they pay? 0. When we say lifetime membership, that's what we mean. Everything a trader needs, all under one roof, one low price. 9 out of 10 new traders fail because they don't have a teacher. Imagine trying to become an electrician without having someone to teach you. That would probably be a shocking experience. Or a plumber, or a pilot, or a brain surgeon, right? There's nothing wrong with watching YouTube videos. We make one every day. There's nothing wrong with reading books. But let me help you understand something about the world of trading. The more complicated people make it look, the more stuff they can sell you. In the 1800s, when we had the great gold rush in California, who made the most money? It sure wasn't those digging for gold. It was the people selling the picks and the shovels and the axes and the Levi's. Think about that. It's a great analogy to the world of trading. You don't have to understand everything there is to know about trading and the markets and the trend and the tricks and all this other stuff. You simply need to know enough to consistently reach your goal on a daily basis. Our strategy and our indicators don't change from day to day. They don't change from market to market. It's the same thing, the same way, every single day. So many traders, every time they step up to the plate, they change their swing. Okay? That's not going to get you anywhere. You need a definable edge. In fact, my dearly departed friend, Mark Douglas, in his book, Trading in the Zone, said trading perfection is simply this: knowing what to do, when to do it, and then doing it. That sounds pretty simple. That requires that you have patience and self-discipline. It also requires that you have a definable edge, which is what we teach you. All right, so the ES is stalling out here at this previous swing high. So we're going to need a new round of commitment from buyers to push us up to the long target. We already exceeded the short target. But the step line crossing over tells me the market's running out of steam. If we get a pullback. Now, in the Logic 247 channel, there's over 13,400 individual alerts. Every one of those is a trend trade as defined by the 30-minute chart and the BBC. When price is below the BBC, there will only be short alerts. Once price is above the BBC, there will only be long alerts. Not that counter trend trading is illegal, immoral, or fattening. It's not. But a counter trend trade simply does not have the same high probability, low risk nature of a trend trade. When you go to fly a kite, which way do you launch it? Into the wind or with the wind? When you go kayaking, do they drop you off at the bottom of the hill or do they drop you off at the top of the hill? Think about it. It simply makes sense to go with the flow based on a higher time frame. So we will teach you as a member how to use multiple time frames so that you're always trading in the direction of the 30-minute trend. So we'll peep back at this in a little bit. Dow, here's where the market opened, came right down to the target. Just like the ES, we pull back to the VBC. Now this right here, this candle is the London Open. Okay, so we rallied into the London Open and then rolled over. Came right back down to the target, came back down to the weekly zone. We overshot the zone a little bit. Then, true to form, red and falling turned to blue and climbing. Price got back above the BVC. We got a nice leg right up to the area of the previous bearish cross. Okay, we pull back to the BVC. We make a run at the zone. We consolidate for an hour and a half there. We finally managed to push through, and then we've overcome this bearish cross area. So the next place we would look for potential resistance would be right off this swing high. Okay, that's why the target's there, because the market will most likely, if we can overcome the high of the previous 30-minute candle, you'll have an opportunity to take the trade to the target, but as you should anticipate resistance here. Now, if price can overcome this resistance, this is all based on market structure, that leaves you, I mean, you get your goal for the day on the way to the target, but if price trades through the target, then you would expect it to go up to the weekly zone, as it did here, as it did here. Price drops, support. Price rallies, resistance. Over and over, again and again. We've published the zones again since December 14th of 2009. The quicker you get familiar with them and how to utilize them, the sooner you're going to be able to trade without having someone else tell you when to get in and when to get out. But as a member, you'll always have access to the zones. You'll always have access to the Logic 247 numbers. You'll always have access to the CTA numbers. Moving on to the Russell. Here's where we opened last night. Below the VBC. Below the weekly zone. And where did we go? Leg. Retrace. Hit the target. Spiked the zone by just a little bit. Buyer stepped in. Have driven us up now. We not only hit the short target, we hit the long target, and we've even made it up to the high that was put in back on Friday. This is Tuesday. This is Sunday night, Monday. This is Thursday night, Friday. Okay. Now, notice how the step line is crossing over blue and climbing. We've got a high, a lower high, a lower high, a lower high. This tells me the market is going to most likely attempt to pull back to the BVC. If price can overcome this high, then you've got a nice window of opportunity up here. Plenty of room to get your goal for the day. 1934 up to 1938. It's 4 points, $50 a point, $200 per contract traded. On the NQ, here's where the market opened, and every one of our members and every one of our trial members had this information. Now just this one candle right here, you're below the BBC, you got red and falling. This candle opens at 11,950 and takes you to the target at 11,923. We'll call it 25 points. $20 a point, $500 per contract traded. So we hit the target. Price always reverts to the mean. The pullback holds more often than it doesn't. Down we go to the target again, and then down to the zone. We overshoot the zone a little bit, and then just like all the other indices, we got above the BBC. We made a run to the weekly zone, pulled back. We're in the process of making another run, but notice the step line is crossing. We're printing a red candle. As we pull back, price could find support at this swing low at the zone, but it's most likely hunting for the BBC. Over and over, again and again. Exactly the same on futures, on stocks, on crypto, on Forex. All right, crude oil. Here's where the market opened, and down we go to the target. When the price of crude moves $1, that's worth $1,000 per contract traded. So we overshot the zone a little bit. Buyers came in, took us back above the BBC. The pullback holds, and off we go. Now, to be conservative, if you wanted to wait for price to get above these highs before going long, say 77.90, that's 78.90, that's $1,000 per contract traded. Now, when price ran into trouble, right here, where once you've been trained, you'll anticipate. Price pulled back to the zone. When price drops to the zone, we expect support. When price moves up to the zone, we expect resistance. Support, support, resistance. And we get through it. We pull back, it holds this support. It doesn't matter what market. We're not teaching you how to trade a specific instrument. We're teaching you the principle of trading. Once you learn that, not only do you not need someone to tell you when to get in and when to get out, but you can go trade wherever there's opportunity. You don't have to sit and stare at charts all day long. You're going to, over time, develop a few markets that you enjoy, and there are going to be people who will tell you, well, you can't trade gold the same way you trade the S&P Emini or Walmart because they all have different personalities. They probably do. But I'm married almost 40 years, so I'm not looking for a relationship here. I'm looking for a high probability, low risk trade opportunity. I don't care if it's in the S&P or the Dow or the Russell or the NQ or crude or gold or Amazon or Alphabet or Bitcoin or the British pound. So if you want to spend all day staring at the charts, by golly, it's your trading business, and you can certainly do that. But once you understand how to trade, then when you sit down at your desk, you're not sitting down to trade, you're sitting down to find opportunity. Once you find opportunity, now you're ready to trade. And the alerts that come out around the clock help you be prepared when price reaches that area. Okay, so we're still stalling here. Blue and climbing has gotten directly above price. That means it could become resistance. Okay. Gold, we have rolled forward to the J contract. Two-sided action. Here's where the market opened last night. The pullback to the VBC held. Blue and climbing, turned to red and falling. Took us right down to the zone where we consolidated for an hour and a half. Then we dropped through and went right to the target and then some. Remember, once price trades through a target, it will most likely get above it and do it again, and get above it and do it again. Now, when crude moves $1 in price, that's $1,000 per contract traded. When gold moves $1, that's $100 per contract traded. When silver moves $1, that's $5,000 per contract traded. So we hit the short target and we've now hit the long target. Why does price do this? Important prices, important areas are almost always tested. Notice here on gold, step line has crossed from the left side. See, on a long move, this is what you want to see. You want to see price, step line, blue and climbing, BBC. But once that step line crosses blue and climbing, price may go a little higher. It may challenge this area here, directly above price. But in every market we've looked at so far, looks like there's a potential retracement on the way. A lot of people don't want to be exposed to the markets on Fed Day, and others do. I call those the gamblers. Know when to hold them, know when to fold them. So gold hit the target, both sides, two-sided action. Remember, these numbers were published last night at 6:55 p.m. Eastern. We hit the short target the first time at 1 a.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, but we make sure everybody's taken care of. And then this morning we hit the target, about 12:30. Yeah, 12 o'clock. So you can see you have plenty of time and plenty of opportunity to get your goal. And understanding prices below the VBC, I want to be trading short till red and falling turns to blue and climbing, and then I've got to get ready for a transition in the opposite direction. When you move from futures to stocks to crypto to forex, you don't change a single rule, you don't change a single setting on the indicator. Everything we teach, every tool that we provide is fluid across all markets, all time frames, from 1 minute to monthly, from futures to stocks to crypto to forex. Silver. Two-sided action. Here's where we opened last night. We pulled up to the zone, which we'd expect to be resistance, and it was. And it sent us right down to the target. 2 pennies is $100. So if you wanted to wait for price to get below these swing lows here, 23.62 down to 23.50, that's $600 per contract traded. So we hit the target and bounce, trade through it again, trade through it again, and this time takes us to the zone and below. Now what you're watching for is red and falling to turn to blue and climbing. Once price gets back above the BBC, right up to the zone, and now we've traded through the target twice. Important prices, important areas, almost always tested. On the euro, here's where we opened last night. Remember, it was on the second candle that the CTA numbers were posted. Price pulls back to the BBC, pull back holds more often than not. Down we drop to the target, through the target, to the zone. Remember, the zones come out Monday morning, 6:15 a.m. Eastern. Once they're published, they don't change the entire week. So price manages to get back. Red falling turns to blue and climbing. That's your first heads up. The direction of the market is changing. Once price gets above the BBC, leg, and a retracement, leg, and a retracement, and now a leg, right up to the zone. If price can overcome this high right here, that will take us to the long target. This bearish cross right here is also, when you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be resistance, at least the first time up. Same is true of a bullish cross. Okay, got a bullish cross here. Price drops back to this area, most likely be support. And last but not least, the bonds. Okay. The long target was 130.12, which we hit. We didn't quite make it to the lower one, 129.12. But you had lots of opportunity to get your goal for the day here, 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 and here. Our goal is to make it as simple as possible. Not complicated, so that we can sell you, oh gosh, new discovery after new discovery after new discovery. One promise you have from us is that we will never insult your intelligence. I'd ask, is there any reason the gold move looks just like the crude oil move? There's gold, there's crude. Well, since you asked that question, here's the ES, here's the Dow, here's the Russell, here's the NQ. Yes, the S&P 500 E-mini is the bellwether, and it will often dictate what all the other markets do. So even if you don't trade the S&P 500 E-mini, you should always keep your eye on it. Okay? And that's why we start out every daily session with this. We're up against resistance. Our buyers willing to risk more. It takes money, it takes financial commitment for price to rise. All it takes for price to drop is for institutional buyers to hit the pause button. They're only going to keep buying at this point for so long, and if they can't move the market, they're going to stop buying. Step back and wait for a better price. To become a lifetime member, go to eminifuturestrading.com. If you have any questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail, according to Futures Magazine. That article was published in 2006. In 2005, I moved from the world of stocks to the world of futures. So needless to say, when that article got published in 2006, I was not a happy camper. And what was frustrating is that the article, while it gave you all the statistics and numbers, it never answered the question, why? Now, 9 out of 10 failing, Navy SEALs, and that's, arguably one of the toughest jobs on planet Earth, they don't have a 90% washout rate. So I made it my own personal mission to figure out why everybody's failing. And it quickly became apparent because they didn't have a teacher. Oh, they might have been a part of some chat room, and there's some grumpy guru barking out this and not admitting, sweeping stuff under the carpet when it doesn't go his way or her way. We're totally transparent. In the live training room, you see every stop out that happens. With the alerts, both Logic and Concierge are published way ahead of them being triggered. So, I just don't know of any way to be more transparent. Michael and I, we went through the same struggles that every trader goes through. And we made a pact that we were going to figure out. And we owned every indicator and oscillator on planet Earth. In fact, when there was nothing left to buy, we started rolling our own. And it dawned on us we were headed in the wrong direction. More stuff was not the answer. Less can actually be more. And so as we begin to peel away all the nonsense and the parlor tricks and the circus acts to where we could actually see price, it became pretty obvious the error of our ways. And since 2008, we've been working every day to make trading as simple. Trading's not easy. Please don't misunderstand me. Trading is not easy, but it can be simple. And since 2008, we've worked daily to make it as simple as possible. And thanks to TradingView and the fact that our indicators are now available there for you, because they code in HTML5, it's a browser-based platform, so you can log on from anywhere, any computer, trade your account. Your current broker, you can hook it up to TradingView, or you can get your data from TradingView. But it has just opened so many possibilities for so many people, and so we're very thankful to the folks at TradingView and for the support they're providing as we prepare to launch our live training room specifically for those using the TradingView platform. Okay, let's wrap it up. You know how to get a passport. Once you become a member of the family, you'll have lifetime access to everything you see here. The logic alerts, the concierge trade alerts, the strategy and indicators are fluid across all markets, all time frames. We really do provide unlimited one-on-one mentoring. All you have to do is go on the website and book it. You show up, we show up. You can book with me, you can book with Michael, you can book with Valerie, you can book with Bert. And it's one-on-one. So you have 2 hours of live training every morning. And then we have a 2-hour members-only workshop on Thursday nights. But if there's something that's still preventing you from being consistently profitable, something about the strategy that you don't quite understand yet, or things just aren't clicking, book a mentoring session. Because once you become a lifetime member, you have unlimited access. Some new traders will book 2 sessions a week. You can book 3 if you need it. But because we've worked so hard to make it so simple, and because it's rules-based trading, you'll quickly figure out that the question you just asked, you asked last week, and you already know the answer to that. And now you're on your way to becoming self-sufficient. Let's wrap it up with a good word for the day. Yesterday we talked about blending two families, kind of like the Brady Bunch. Today, let us talk about forming healthy relationships. Psalm 147, verse 3. He heals the brokenhearted and binds up their wounds. If you're recovering from a bad relationship, it's a mistake to rush into another one. Unhealthy people make unhealthy choices. Some wounds take longer to heal than others, but you can count on this promise. He heals the brokenhearted and binds up their wounds. All God asks is that you give him a chance. Start by taking time to search his word to find out how he feels about you. His opinion is the only reliable foundation on which to build your self-worth. If a perfect God with full knowledge of your struggles and shortcomings can love you, the message is lighten up on yourself. But don't put God in the position of doing something he can't do. Well, wait a minute, I thought God could do anything. Let me explain what I mean. Two traders walk out of a bar. They go back to the office, to their adjoining cubicles. They both love to trade the S&P 500. But they see the market differently. One has his style, the other has his style. So at the same time, one trader goes long and the other trader goes short. And they're both praying furiously in their cubicle for God to move the market in their direction. Now, what's God supposed to do? Well, let's see. This one prays more than the other one. But this one, he tithes more than the other one. Which one should I move the market for? Many people struggle with that. Especially people who don't need their trading income in order to live. Perhaps they own a business, perhaps they're already retired, they have a retirement fund, and they've made a decision that anything they earn in the world of trading is going to go to build God's kingdom. Who's God going to favor? God can't move them. He's not going to move the market in favor of any one person. By the power of the Holy Spirit, he can help you learn how to trade. How many times have you been down on your knees, you just dropped $5,000 in your account, and you're pleading, oh God, get me out of this, and I'll never make this mistake again. And then tomorrow you do it again, right? So, don't put the cart before the horse. It's awkward for both of them. Ask God to help you learn, to open your eyes, to open your mind, to open your ears so that you hear. And then to give you the patience and self-discipline to actually do what you've been taught. Sometimes I get into a mentoring session. In fact, I was at a mentoring session with someone the other day. He said, man, I just can't get it right. I got all these voices in my head. I go, well, tell me more about these voices. And he said, well, I got these, I know these one traders over here, they're telling me this, and then I got these other traders over here telling me that. And I go, why don't you solve the problem and just learn how to trade so you don't have to listen to anybody? He goes, I think that's the simple. He goes, that's what you've been telling me for 2 years. He goes, but I want it all now. I want to make money now. If you don't have the patience and self-discipline to first learn and then do what you've learned, you should probably look at something other than trading. Anyway, back to the good word for the day. You can only love or be loved again with the same wholeness with which you love yourself. Next time, make sure your choices aren't predicated on need or the fear of being alone. And be careful. When you don't value yourself, you attract people who won't value you either. And in those rooms, people who will use you for their own ends. They're more interested in your money than you are. You deserve better, so hold out for it. You train others how to treat you by how you treat yourself. And as you become spiritually and emotionally whole, you'll start seeing how unhealthy some of your former choices have been. If some people walk away, so be it. Sometimes you have to give up less in order to have more. The God who said in the Garden of Eden, "It is not good for man to be alone," has new relationships in mind for you. But he is waiting until your values and self-perception line up with his. So take it step by step, one day at a time. And remember to rejoice. Your best days are still ahead. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.